Yo, 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 what's going on, everybody? Welcome to TrendSpider Live. How are we all doing today? See, we got some people that are already in here waiting. We're going to be watching FOMC today. Should be a good time. Should be a very good time, honestly, with all the news surrounding Trump and Powell lately. Um, I have how many Fed rate cuts are there going to be in 2025? The poly market prediction market on the chart right here. I was just looking at this right now. Interesting enough, it's actually been moving kind of a bit for the last 15 or like hour or so at this point. As you can see, it says how many Fed rate cuts are there going to be in 2025, and two just declined a decent bit and one increased a decent bit, which means people are expecting less rate cuts than they were, just this morning, which I don't know. These prediction markets, in my opinion, are very cool, you guys. If you pull up the daily chart, you can see that actually kind of somewhat surprisingly, a lot of people are, most people are predicting there's going to be 2 rate cuts in 2025. We have 3 more meetings, I believe, including this one. So we'll see what happens. We're definitely going to be watching this as the official decision drops. And then also, of course, as Powell comes out, one that's really going to be moving today, or probably not moving much at all at this point anyway, but is the Fed decision in July prediction market. As you can see, this one is obviously everyone's pricing in. There's going to be no rate cut change. So rates are going to stay the same. That's what everybody's expecting. Very, very small chance that, they increase rates or basically just don't change rates. So everyone knows what's going to happen now. So everyone's basically going to be watching what Powell says in about, I don't know, 45 minutes from now when he goes live and starts discussing future rate talks. But until then, on my chart, I decided to put on our per session volume by price indicator. If you guys haven't used this, it's actually really cool. Probably most of you guys have seen our regular volume by price indicator, which plots, volume on the right side of the chart. I'll go ahead and pull it up. It's actually kind of cool to use both at one time. But if you go to indicators and do volume by price, you can go ahead and add it. I like to put about 75 columns. And also, I'll show you guys another cool thing that is actually pretty new. We have the visible range volume profile now. Some of you guys may know it. So if you go to the settings and go to the data range, we can change it to visible range instead of anchoring it manually using the vertical bar. Basically, what this does is whatever is visible on your chart, it'll automatically update the volume to use. Let's see if we have any questions. Good morning, everybody. Good morning. Good morning. Well, good morning for me over here on the West Coast. Where is everybody tuning in from? It's 10:48 a.m. over here still, going into the afternoon. We got a question. What happens if they cut the rates, drop, or continue upward momentum? Generally, rate cuts are bullish for equities and growth. However, I believe historically that when rate cuts actually do happen, the markets have come down. We can actually go ahead and plot that on our TrendSpider charts. Let me do EFFR, effective federal funds rate. That is basically just, the funds rate, which is basically the rates that everyone's looking at. And we can actually plot that on our chart. I'm going to plot it on, overlay across the actual candles. Let me hide these indicators so you can see this real quick. Go ahead and do that. Visible range, volume by price. And so this is basically the interest rates as set by the Fed that I have plotted here on my chart. Go ahead and remove that. So let's go ahead and take a look at what happens when they start cutting rates. It's pretty easy to compare here on TrendSpider. This is using the Fred indicator. You can plot basically anything you can see on Fred, the data site right here onto TrendSpider. And so if we kind of just look at what happens when they were cutting rates historically, we can just draw some horizontal lines. So as you can see, they clearly started cutting rates right about here. Yeah, this is 2019, right after Volmageddon in 2018. So they started cutting rates there. We went up for a little bit. Then we had COVID. That was kind of a weird one. Let's go to the most recent time. I mean, so technically we already did start cutting rates, back in late 2024. So we'll go ahead and mark this. And ever since then, of course, we saw a little bit of up movement. Then we had that tariff hype, or not hype, tariff decline there. And then we're back at all-time highs. Hello, hello. We got people from Houston, London, Saudi Arabia. Love to see it. Love to see it. Nothing this year. No, you think no rate cuts this year, True Century? I don't know. I think we're going to get at least one, but we'll see. Maybe not. Maybe not. Should be interesting either way. And where was the last rate cut here? So let me actually put this on the lower indicator, so it's a little bit easier to see the chart too. So as you can see, this rate cut started in 2007, right around here. And in 2007, once they started cutting rates, market declined. Where else did we cut rates at? Did I get them all? 2019, we had a little up move, then a decline. Where else did we do it? No, there's another one. Looks like right here, yeah, in the 2000s, right about, right there. Rates started declining and the market started declining as well. So, that's interesting. By the way, for all of you guys here live on the stream with us, we are running a very, very nice sale for you guys. As you can see, flashing across the screen. You can use this link I just put right there in the chat to save up to 53% on TrendSpider if you want to go ahead and follow along in the stream with us. It is pretty much one of the best deals that you can get on the platform. So, and it's only live for today for you guys on the stream. No one else will see it. It's a completely separate landing page from the main website. So take advantage if you're looking to. Okay. And yeah, Fed chair resigning, maybe. That's definitely a possibility. Trump was over there, basically interrogating Powell. I'm sure he was not interrogating, but he was over there, talking with Powell about their $3 billion Fed building renovations or whatever. And of course, asking for rate cuts. You are welcome. 53% off annual plans. Definitely take advantage of that. So yeah, kind of just was going through here and looking at what the market said after rate cuts using the Fred indicator on TrendSpider. And so in the past, it did correlate pretty good with the market declining. So the market, as the rates were being cut, so is the market was being cut in half, it was going down. So, but in recent times, wasn't always the case. Like in 2018, 2019, this rate cut did lead to a rally initially, and then kind of weird, we had COVID, so it's kind of hard to judge anything based on black swan events like that. Then right here in 2024, when they started this initial rate cut cycle from the increase, we have gone up, and then we had this whole tariff news, and now we're back at all-time highs. So I wouldn't say there's a super, super crazy correlation with rate cuts and what the markets will do. But however, generally, the markets are forward looking. And so when traders think, because rate cuts are generally good for stocks. However, since markets are forward looking, you can argue that it's pricing the rate cuts in right now as we're hitting all-time highs, so that when they come, maybe it's a sell the news event is what I'm getting at. Yeah. Dan, exactly. It's looking like he's saying it's looking like rate cuts are bearish for risk assets, aka stocks, crypto, etc. And he's talking about 2008, 2009, acknowledge a weakening economy. Yeah, and honestly, the economy is pretty, honestly, good on paper right now. I would say. I don't know if you guys saw GDP came in today at 3%, really killed the estimates. So GDP was looking good. Let me see what the last inflation print was. Let me see if we have it on here. But inflation is, not great, but it's not super high either. So I don't know, guys. I don't know. We'll see. But we got 6 minutes, by the way, until until the rate cuts are decided. So let me put back up this poly market indicator and see what happens. I mean, pretty sure we all know we're pretty much not going to get a cut. If they do end up cutting rates, that'll be an insane surprise for everybody. It's kind of funny. You can bet on them increasing the rates. You would, risk very little to make a ton of money probably. Yeah, guys, it's going to be coming in just in about 5 minutes. What are you guys watching? I just have SPY pulled up. I'm going to look at the per session volume by price. By the way, I will drop a link for you guys if you want to go ahead, if you haven't used this per session volume by price, to go ahead and import it. It's free from the TrendSpider store. We have, if you go to our TrendSpider store on our website, there's so many indicators and scanners, strategies that are completely free for you guys to import if you're already a TrendSpider member. So we got some people, most people, or a couple people looking at NQ. You can pull up the NQ futures and the QQQ. The per session volume by price is honestly probably better used on futures anyway. It's a lot more liquid. Let's see. On the topic of GDP, estimate for July was initially 3.5 and marked down to 2.5 forecast, if you didn't know. Interesting. Okay. Yeah, I did not realize that. That is interesting. Yeah, because I believe I saw this morning it came in at 3%, and then I guess initially it was at 3.5%, according to Dan. That is interesting. So maybe they knew it was coming. Who knows? Who knows? But we got 3 minutes till we get probably some movement here. Let's go on to, I don't know, should we go to the 1 minute or the 5 minute? Let's go on the 5 minute. Should be pretty fun to watch here. Let me pull up. There's no news on QQQ. Let's do. We have seasonality up. That's fine. We'll stick up a watch list here or something. Yeah, it's earnings season is, really upon us right now, guys. We have this power earnings gap scanner that I've been keeping a close eye on lately. So maybe in a second here, once we get some movement, we'll go ahead and take a look at this and see if there's anything cool happening. VIX is going to be a fun one. What is VIX trading at? Whoops. VIX is sitting here at what? About 16. Let's go on the daily chart. Yeah, not a whole lot of volatility in the market. We'll go back to QQQ. Let's go back to the 5 minute. But yeah, volatile is always fun to trade. 200 EMA. What are you looking at the 200 EMA on the daily? For what? QQQ, I'd assume maybe. You can stick in. Hold on, give me 1 second. We got 2 minutes. Let's get this. Let's get an EMA up here. Why not? On the VIX, TA on the VIX. Not something I normally do, but let's take a look. Yeah, I mean, maybe it'll mean revert, I guess is what you're saying, probably, to that. Yeah, it's only at 19 right now, so that can easily happen a day, really, on the VIX if something crazy happens. But how much time do we got? We got 1 minute. 1 minute until the announcement, you guys. Let's see what happens here. Zoom in a little bit. We're trading at the higher end of the range today on the QQQ. You've been basing right here. Right around like 570 is like the top of the range, and then the low end of this base is kind of 569. We're trading in this dollar range. Maybe we will get a breakout from it, I'm sure we will once we get this announcement here any second now. So it looks like Trump is talking right now. That's interesting. He says, I don't know. I think we'll have a deal with China. He's talking about China trade talks, it looks like. But yeah, we should be getting an announcement here any second. Any second. What up? What up, DU? Is that a new candle? That's a new candle. Oh, yeah, new 5-minute candle. Yes, 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 yes. Not a whole lot of movement yet. Let me see if anything pops up. I'm over here looking. Whoops. What do we got? What do we got? Yeah, it looks like no cut. Holding rates. Everyone knows that. And the market is breaking out to the upside. Let's go. Love to see it. Love to see it. It's a nice looking 5-minute chart, honestly. You guys had this base and we're breaking up out of it. Let's stick on. Do I have relative volume on here? Let's see. We got a looks like a high volume node from yesterday, right around this 570 range too. And yeah, I don't know. We'll see if we can break above it. Let's see if we can break above it. Let's go on the 15-minute. See if that's about the same. Yeah, so there's a high volume node, kind of yesterday's value area high. I don't know if you guys use the volume profile a lot, but kind of break down how to read it real quick. Basically, there's a value area, which is in between these blue lines in the shaded area. That is where 70%, I believe, of the volume is traded for this session. Then you have the purple line, which is the volume point of control, which is the price level where most volume has been traded. And right now, we're above the value area high for today's session, for the intraday session, testing yesterday's high. Yeah, we're in an inside day today, which means we're trading inside of yesterday's range. Another good way to actually see that is we have a previous day levels indicator I can stick on the chart. So as you can see, this is yesterday's low. That's yesterday's high. Yeah, where did today start? Today started here. So in a day. No rate cuts, which everybody was expecting. Yeah, we're definitely breaking down here. Let me throw on. Yeah, so this is the prediction market. I mean, that's not going to do a whole lot. Let's get on this other one here, which is and there's all these other ones you guys can check, but I'm going to put on how many Fed rate cuts in 2025. That one should be fun to watch. The chance of 2 rate cuts is currently declining, of course. Not super surprising there, but there's a lot of other stuff in here. This one should be interesting. U.S. recession in 2025. Chances of recession dropped this morning because probably of the good GDP read. So that was cool. Let's see. Jerome Powell out as Fed chair in 2025. Yeah, guys, we have a live, I'm doing a live with Tom Sosnoff here at market close as well. I'm going to be picking his brain about the Robinhood earnings, so definitely be sure to tune in for that. Should be a good time. Should be a good team. I tweeted because it's important to show the GDP change, so I'm not making it up. Oh, I appreciate it, Dan. Yeah. Yep, no cuts, no cuts. Let's see. Reading the chat here. You just said we're breaking out. Yeah, we were breaking out until we weren't. Look at that 5-minute candle. I was trying to pull up the volume. Put on the volume here. Yeah, pretty solid volume in this candle right here, obviously. This 5-minute candle. Someone lost $100 betting on cuts on Kalshi. Yeah, well, the odds were, the risk to reward was in your favor, maybe not the win rate, but you probably could have made a ton of money if they did cut. But yeah, getting a lot of volume right here. That 5-minute candle just ended. Let's go and take a look at the 1 minute just because why not? Yeah, so really, honestly, haven't done a whole lot of anything so far since this. Just a lot of volume came in, of course. Curious what this prediction market is looking like. So this one is Jerome Powell out as Fed chair in 2025. By the way, if you're on TrendSpider and you want to take a look at this poly market indicator that I've been looking at, here is the link for it in the chat. And yeah, it looks like people are saying 17% chance that Jerome Powell is out by the end of 2025. And that's kind of going up right now. Maybe because he didn't do a rate cut. I don't know. Let's see here. What else do we have on the prediction markets? Yeah, maybe that's enough. Let's see. Maybe there's one other. We saw the U.S. recession one. Let's see. Super Bowl champs. Fun. Yeah. So there'll probably be some more cool ones coming on poly market, maybe for the next Fed meeting. Trump says he's hearing rate cuts in September. Yeah, that should be a good one to check out. Rate cuts in September. I don't know if they have one on poly market for that yet. I don't see it on the total volume. I'm sure after today they'll probably have the September rate cut odds up there, which honestly I'll be, because everyone knew there was going to be no rate cuts this time, but for September there's actually probably a pretty good chance of a rate cut, depending on what Powell says. Oh, here's a good one that I can stick on. So if you go to the poly market custom and stick this link in, I believe this should work. Hide that. And this one is probably going to be the one I'll be tracking. It says Fed rate cut by ? And so most people are saying December meeting. The odds, okay, so we got most people, 80% chance of a December meeting cut, 60% chance of a September, and 71% chance of October. So September is kind of increasing quite a bit right now of a September rate cut. So we'll see. 70% chance. Where Faisal, where are you seeing that? The CME Fed Watch? That's actually a good comparison. Let's see what the CME Fed Watch is saying regarding what they think. So if I go to September on here, I'll pull it up in a second. So this is interesting. We're at 4.25 to 4.5 basis points right now, or percentage. And then it looks like 61% chance, or really like 63% chance, according to the CME Fed Watch, that we get one in September. So there's a bit of a spread here. This is about 37.7 that will stay the same, and then the rest is just lower. So I'd say this is about like 60 to 65% chance. And then here on poly market, we're getting a 60% chance as well. So they're pretty close, very close actually, which is, I don't know, I think that's kind of cool to look at. Someone's saying 70%. I don't know. I mean, odds are odds, but it looks like it's somewhere from 60 to 70% for sure. Let's pull up the 5-minute chart again, see what's going on, if anything. Yeah, so we're still trading at, the higher end of the range. We got Powell. He's going to be coming up here in about 20 minutes. Until then, it looks like most of the move is probably done until Powell comes up, I would assume. Yeah. Not a whole lot going on the QQQ. All right, thanks for that source. Very cool. But maybe let's take a look at our power earnings gap scanner. Maybe I'll drop a link for it for you guys. It's a pretty good scan to use right now, especially in earnings season. Let me go ahead and pull it up. So you just type power gap, or you can just click the link in the description and import it. But I'm going to go pull it up right here in the platform. Click scan. We're going to scan in the NYSE composite. Honestly, let's change it to the NMS because it's where a lot more of the tech companies are. And let's see if we have any new power earnings gaps on the market today. I don't know if you guys saw SoFi, but that one was pretty nice yesterday. Look at that. According to the analyst estimates indicator, the top of the line estimates for SoFi are at just 21, and we're trading above that. Is that true? Let's go to the what's happening now tab real quick. Pull up analyst estimates for SoFi. It looks like I already had them up. So I do see, that's 2021. Let's filter this. So our new symbol is SoFi. Let's see, date is after, I don't know. Do something within this month. What are analysts saying about SoFi? Yeah, top of the range is like 21. So analysts aren't very bullish on SoFi, but because we're trading above the highest analyst rating on SoFi right now. What is the PE ratio of SoFi? PE ratio just tanked with that good. They had a great earnings report. Let me pull up the reports tab. Posted a video about this, about SoFi earnings yesterday, if you guys didn't see, but look at that amazing revenue growth. I mean, they just absolutely killed earnings. 43% change year over year on revenue, 700% change on EPS from 1 cent to 8 cents, 33% surprise in EPS. I mean, it looks great, but analysts just don't care. PE ratio dropped, it looks like. So, yeah. Well, maybe you'll get some. It'll be interesting to see what the analysts say. I mean, it's whatever. They're just analysts. Who cares? But that is interesting. I can pull up Tesla. What's going on with Tesla? Tesla. Analyst estimates. Why not? We'll stick this back up there. So, I mean, Tesla is a crazy one for analysts because, you know, you got analysts saying it's worth $20 a share and you got analysts saying it's worth $500 a share. But they're trading right at the median around the 300 to 330 range. So, yeah, that's what analysts are saying. So they're saying we're generally about the middle or about at a solid valuation for them. What do I have here? This is the PE ratio. PE ratio is sitting at 149 on Tesla, obviously very high. Their last couple earnings reports have not been super great. Reported 22 billion in quarter 2 25 not that long ago, just down a few billion from quarter 2 24. EPS also missed minus 23% from the prior quarter, but it surprised they at least surprised the expectations, but down from prior years. PE ratio very high. So at least for Tesla bulls, you know, Elon is not really involved in politics a lot anymore. I don't know if he's even still doing that new political party stunt. Who knows if he's actually going to go through with that. But yeah, I mean, if you're betting on Tesla, you're betting on Elon, of course. I mean, they have a great product. Just a lot of craziness with the stock. The valuation is priced really high. But, you know, if they pull off this robo-taxi stuff and their AI robots perform well. You know, they're big into AI. They have a lot of potential. So I don't know. But, you know, numbers, revenue, and stuff like that hasn't been super great lately. As far as the chart goes, yeah, they haven't really gone anywhere really for a while since like May of 2025. They've been sitting in between like 360-ish to like 270, which is a decent range. What is that range? Decent range. There's a 30% range from top to bottom. So they've been like moving back and forth, but really have not picked a direction. And they have this pivot area right here. So I would say, Yeah, it's about at 295. So I'd say 300 is a pretty key level, just a psychological level that probably want to hold if you're in Tesla, I would say. I don't know. That's my thoughts on Tesla, I guess. Plus 18. What is plus 18% today, DU? And we have, Powell's going to be live here in 15 minutes. It's really up to you guys. I can stream him live if you guys want to hear him talk, or I can just kind of listen to him and give my thoughts on what he's saying. I don't really care. It's up to you guys. We'll see what the vibe is. Maybe I'll at least stick his face up there and see what he's saying for sure. It'll be good to watch. He'll get some questions. He'll probably go up there and say, well, we're going to wait for the data before we make any decisions for next time, like he always does, and then he'll call it a day. Let's see. QQQ, what are we doing? Yeah, still not a whole lot of movement there. Let's go back to this power gap scanner. Let's go to the power gap scanner, see what earnings that we've had already, and then we'll go ahead and take a look at earnings coming up. Again, we have a live stream that we're doing with Tom Sosnoff today after hours, literally in just 2-3 hours at this point at market close, 15 minutes after market close. We're going to be breaking down Robinhood earnings. We also have Meta and Microsoft today as well. So lots of big earnings today, you guys. It's a huge day on the market. We got FOMC obviously happening right now in 14 minutes. We already had the rate decision. And then we got tons of earnings after hours. So definitely tune in. It's great times for the market. Wow. Wingstop. Look at this. Power earnings gap on Wingstop up 27%. That is insane. Look at that revenue growth. Anyone trading Wingstop looks like it's making higher lows on the weekly. That is pretty crazy. It's actually very nice. Let's see. Looks like their revenue, 174 million, up about 12% from the quarter prior. This must have been some really good forward guidance, I would assume. Big day for semis. Let's take a look at semis. Hold on one sec. MRVL is on the power gap scanner. Yeah, it wasn't earnings, but just a gap up from Marvell Technology. SMCI power gap as well. Well, they did have a power gap right over here. Look at that. That's a beautiful, look at this. Just base, and some breakouts. Power gap right there. And this is SMCI. They got earnings coming up on August 5th. That's a great looking chart, to be honest. Has plenty of room to go up to all-time highs as well. Very nice. Very nice. IBKR had an earnings power gap right here as well. This is Interactive Brokers, pretty much one of Robinhood's competitors. So this is good context going into Robinhood earnings today. I'm going to go and pull up Robinhood because it's reporting today after hours. They're having a pretty solid day so far. Open to close, they're up about 3%. Really nice going into earnings. Pretty much at all-time highs. Their all-time highs at about, 113 and 44 cents. We're at 106.87. So yeah, guys, they've ran up from the low here in April, probably, close to 300%. So yeah, there's probably a lot. They need to perform really well to keep that. Yeah, it's hard to justify buying Hood here. I would agree. Definitely would agree. What else do we got here on the power gap scanner? Already looked at SoFi. Not any other crazy big names. Peloton had a nice little gap. Terrible revenue trend. TER. Look at that power earnings gap on TER. This is a great scanner, you guys. If you like to trade power earnings gap, you definitely got to check this one out. Definitely. Did I drop this link for you guys? I'll go ahead and drop it right now in case I didn't. Here in the chat, that's the power earnings gap scanner. Let's see. Let me pull up ARM. It's like ARM has sort of a cup and handle pattern forming here. Sorry about that. You got a pivot level here right above around 166 to a buck 71. Yeah, looking pretty good. Looking pretty good. I mean, basically it's just been trading in this pretty large range, like a 100-point range on ARM. Pretty solid company though. Looks like their revenue has been beating every single quarter. EPS pretty much every single time as well, except for one. And what are they up today? Yeah, they're up all right today. Nothing insane, but good day for semis. QCOM is down. Second here. We got Powell in 10 minutes, by the way. He's going to come up live. QCOM and LRCX was at Lam Research. Yeah, I mean, it's up all right. What is NVIDIA at? Probably in new all-time highs like every day, pretty much. Yeah, wow. NVIDIA is absolutely insane, you guys. Absolutely. Look at this company. Go ahead and plot their revenue growth on here and just look at this. This is, I mean, it doesn't get better than this, you guys. Look at that. The revenue growth is, I mean, the revenue is pretty much doing exactly what the stock is doing, except for this April decline and a few pullbacks there. But man, they just absolutely destroy it. SoFi, yeah, did have a gap, and I think it probably did fill it already. I think yesterday after hours, they had some news come out. Yeah, completely filled the. I mean, I don't know. They opened below it created a gap and it opened below it this morning. So, once they fill it here, the low is at 20. Once they hit 22.25, they could hit it today. They've had a really good recovery intraday though, which is a good sign for the bulls and SoFi. Pretty really good earnings report. So yeah, crazy sell-off, but it recovered very, very nicely so far. Crazy volume yesterday. It was like the highest volume they have seen in a long time. Ever since I don't know, January of last year, basically. So yeah, great recovery on SoFi. Yeah, SoFi is a great company. I mean, it took a lot. It was a SPAC, wasn't it? Yeah, it's like IPOF or IPOE or something. They did well in 2020, 2021, just like everything else did well. But, they were in the slump all of 2022 and really didn't start recovering until this breakout here in 2024. Looked like a false move. Great buying opportunity again in April, and now we just skyrocketed. Kind of almost similar to Hood. It looks like Hood has performed even better than SoFi. Yeah, two great fintech companies. Just, I don't know, just killing it, honestly. I was looking into Robinhood's revenue sources the other day. I think it was yesterday because they have earnings coming up. They make a lot of their revenue, like 25 to 30% from crypto trading. And then they make 50% of the revenue from crypto trading and options trading, which is very retail driven. So I don't know. They are coming up with the net interest income earnings, basically because rates are, up higher now. If you don't have gold, especially, they're probably cashing out on, pretty solid interest rate on people's uninvested cash that just has it sitting in there. It's like, any financial institution does. So I think that was like the third largest portion of their revenue. So I don't know, it's just interesting. It's very dependent on how the markets are doing, specifically how active retail traders are. Obviously, they've been killing it lately. But it just really lies and just depends on what the market is doing, I guess. But I don't know. Maybe this revenue trend is sustainable. We'll just have to wait and see what happens, I guess, going forward here. But this earnings will be telling. I mean, not really. The markets have been so good lately that I'd be surprised if they didn't honestly do really good on earnings with the market at all-time highs. There's a solid amount of retail interest going into it. So, yeah. We'll see. We got 6 minutes till Powell, though. Maybe we'll start getting some movement. Let's go check out the 5-minute of SPY. Have not done a ton. Let me put on my per session volume by price again. Hit the 15-minute up. Let's go back to QQQ and get a little bit more action. QQQ is looking pretty good. Train, yeah, still at yesterday's value area high. So let's see. Take a look at some more power earnings gaps. This is the NYSE list over here on my watch list, which is S. So this watch list is a scanner. If you have scanners on TrendSpider, if you didn't know, you can just use it as a watch list that consistently updates for you. Let's check out some power gaps. You got LVS. Yeah, it's a solid one. Very, very crazy chart there. Let's see. Look at copper price action. Remind me what the ticker is on copper. 1 second here. I don't really trade copper like that. Oh, why can't I find it? HG. Yeah, here we go. Whoa! Look at that. Wow. Shout out to whoever said look at copper. This is crazy. What in the world? So I had some stuff right here back on July 8th or so. Trump threatened to double the copper tariffs, which sent copper flying higher, as you can see right here. But now, oh my, this is insane. That's why I don't trade metals or commodities, because I don't understand them like that. But yeah, look at that. Holy moly. I don't know what is causing this, to be honest. Let's see. So let's take a look. This is my, this is kind of a, the TrendSpider sidekick. This is our LLM that's going to be released. I don't know when. It's not open to everybody, but I'm going to say what is happening with copper prices today. The HG1 futures are tanking. Let's see if this gives us any insight. This is still an early beta alpha. It's not out yet, so never guaranteed that this is going to be perfect, but I am very excited for this release. I think it's probably the best financial LLM out there that I have seen by far, because it's connected to all of our data. So I pulled up the CPER fund. Let's see. Yeah, it doesn't see anything for the news. Interesting. There must be something, just, I don't know. Do you see any news on copper that's causing it to do this? I mean, that is an insane move. Let me pull up the daily chart right here. What is this? From open to, I mean, now it's down about 18%. Insane. Yeah, that is insane. There must have been some news Trump is going on in there. Yeah. He announced tariffs, or did he just announce tariffs on them like right now? Maybe. Probably. I mean, something definitely happened. There was a 40% tariff on Brazil, looks like recently. Yeah. 50% tariffs on copper. I just saw that news headline right now. Wow. Effective August 1st. So 50% universal tariffs of semi-finished copper products and copper-intensive derivative products, effective August 1st. Wow. That is a chart. Crazy day on the markets today. Maybe we'll get some more movement here with Mr. Jerome Powell going live in just 1 minute, actually. Jerome Powell will be live in 1 minute. Oh, realistically, probably 5 to 10 minutes, but We'll probably start getting some movement here in about a minute. Yeah, is absolutely why. Absolutely why. What's up, Nader? Chart champ. BMNR. Let's take a look at Bitmine, Nader. See you out there. Yeah, I don't know nothing much about this. I think it's the Ethereum treasury or whatever. I don't know. It sounds like it's kind of like the micro strategy of Ethereum. I don't know why they picked Ethereum. I don't know. But cooked or will cook, I don't know. I don't know much about this at all. But praying for you guys because you could make a lot of money in here. I'll grab some just because Chart Champ said make a quick, 200% maybe. Let's see. I think we will be getting some movement here on the QQQ any second or not. It is 11:31. Let me check out the video stream, see if they are going live. Do they have it on YouTube? Yeah, they're live on YouTube. Copy that.
Timely way to potential economic developments.
Yeah, Mr. Powell is live.
I will have more to say about monetary policy after briefly reviewing economic developments.
Can you guys see/hear that?
Growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year.
Market's loving Jerome Powell right now. Oh, is that a smaller room than normal?
Although the increase in the second quarter was stronger at 3%, maybe not, I don't know. Focusing on the first half of the year helps smooth through the volatility in the quarterly figures.
Market is ripping on Mr. Powell right now.
In net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market,
activity in the housing sector is weak.
Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year.
Low unemployment rate.
Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs.
He's mentioned some tariff stuff right now, saying it's pushing up prices in some sectors.
Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by
Hey, Richmond, is that Adam Richmond? I do.
The Fed has been assigned
What's
two
up,
goals
man?
for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
Wow. Market
Our
is
success
loving
in
this right
delivering on
now.
these goals matters to all
QQQ
Americans.
is moving.
We understand that our actions affect communities, families, and businesses
Pull up
across
bonds.
the country. Everything we do is in
TLT
service to our
moving up
public mission.
a little bit.
We at the Fed
Small
will
cap
do everything we
ETF
can to
IWM.
achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Mr. Powell is done talking. No, that's so funny.
Thanks, Chair Powell.
That's so funny. How did you end up here,
There's a lot of lean
man?
in the markets, and not to mention out of the
searching on
administration
YouTube?
for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Look at that, I called it. We're going to take that information of the data and use it for our September decision.
You took out the word
Called it.
or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration
No decision for September meeting.
Several deals
They're going
with
to take the data.
large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in
So Fed rate cut
in our statement
question
about
mark
uncertainty
for September
reflects
meeting.
what's gone on since the last meeting.
The odds
So
haven't changed a ton.
at the time of the last meeting,
Market
uncertainty
hated that though.
had,
Market just dumped on that.
had moved down a little bit, but it was more or less even this time.
Yeah,
So we
market
took
is
out,
not
had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right. It's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning, we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you ask about the June SEP, I wouldn't, you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to slightly looser policy.
Nick Timmeros, the Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly
DU, it's going crazy, ain't it?
To a small extent.
Let's hop on the 1 minute.
Through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this.
0.3% range, but it's going
To
crazy.
show up in consumer prices, as you know, in the June report. We expect to see more of that, and we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time.
Right in between yesterday's
that the process will
high and
probably
low.
be slower than
Look at that. We've been bouncing
than
off this
expected at the
pivot
beginning,
all
but we never
day.
expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking.
Tons of
right now.
volume coming
But if
in
I could
ever
follow
since
up,
Powell.
Is the reticence to look through for good inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I don't think, I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase.
Yeah, the chance of two
to
rate cuts
inflation.
is
We wanna do
going
that
up
efficiently.
as Powell speaks.
And
So
that
people
means
are
we want to
expecting
do it if you
two rate
move too
cuts more and
soon,
more as he speaks.
you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Yeah, and the volume profile around the 570 range on the
Michael McKee
QQQ
from,
is
Bloomberg
having, it
Television and
has the
Radio.
most volume.
The one big bill, leaving
So you
aside
might
the
head
adjectives,
down there any second.
do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining
Someone's
on
asking about
hold or
adding
cutting back
stimulus
on
in
the number of rate
2026.
cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes. I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost
Market is
to the government
diving.
of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals. And that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that. And it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Lots and lots of volume at this price level, you guys.
Hi,
On
Victoria
the
Guida with
cues.
Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see
That's
their interest in that
bouncing right
issue
off
as being
that
directly tied
568
to the
level
president's
right
push
now?
to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there
Look at this
any
comment.
aspects of the project that they've raised that you
Said-
see as making you reconsider
in
any
chat.
aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic
Basically
preservation at
said,
the National
I
Capital
don't care
Planning
what Trump
Commission,
say
and
or the
a lot of back and
government.
forth there. It was very constructive. We started out to do the work, and we're very well along on that work. And I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Bro is so concerned about the construction of the buildings.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post.
Those memes
what
are-
message do you take from the
those
fact that
memes are
inflation hit
incredible.
2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation.
Look at this
sometimes
volume
early
point
in
of
the year,
control, you
and then
guys.
inflation
568.
turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things
Pull
like
up
the catch-up
TLT right
inflation.
quick.
So, for example, all the insurance
TLT
costs
is dumping.
that are now
Not
they're only
dumping, but
now
it's going
going
down.
through inflation, but they actually reflect inflationary
Interesting.
pressures
Check out
from
SPY.
2-3 years ago. So
Ooh,
that's got to go through.
SPY.
In addition,
SPY,
now
SPY,
we have 3 or 4
SPY.
tenths of inflation
Hughes is holding up
in
way
core
better than
inflation
SPY.
from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the
Hughes down
composition, as I mentioned, has really
0.46% from its
changed.
top.
And if you go
SPY
back
is
to
down
the last couple of years, it
0.31.
was
So
all about
Hughes is down
services
more from the
inflation,
top.
which was
I don't know
being very
why.
sticky.
It looks
Now
like SPY
services
is closer
inflation is
to
coming down nicely.
yesterday's
Goods
low
inflation
than
was
Hughes
well behaved
at it.
before, and now goods inflation is going up. So the story has
Yeah.
really changed. That's
SPY
partially
is
because of
basically
tariffs.
at
It's
yesterday's
also
lows.
partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Has the chance of
Okay,
rate
the other thing I
cuts,
wanted to ask is,
multiple
are
increases.
you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy they use this data a lot too. So it's quite important for our economy and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better
gold,
and
isn't
better
it?
and better. It's very hard to accurately
coming
capture
down.
in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're showing coming in, showing no significant upward
It's
trend
SPY
in
intraday.
inflation over the past 6 months, that
Just
the wait and see approach for inflation
basically
is
hit
actually giving
yesterday's
companies
low.
cover to raise prices?
How concerned am I that say that again?
The wait and see approach is
The
giving
wait and see approach. What do you mean by that?
for cutting rates. You're waiting to see if the tariffs.
Yeah, it's an inside day.
will
Oh,
affect
it just
inflation.
broke the inside
So
day
it's a
right
wait and
now
see
on
approach. So
SPY.
that-
Look at that
You know,
previous day
that's
levels
policy's
indicator.
restrictive. When we start cutting it, it'll go toward neutral.
Barely
Okay.
ticked
This
under it on
delay,
that
though,
5
where
minute
you're saying there's a
candle.
one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance. What may be giving some companies will certainly be taking advantage
Oh,
of
we're
the
gonna
fact
break
that the
this
tariffs and
inside
all
day
the
pretty
discussion
good.
of
Look
how
at
they're going
SPY.
to,
SPY dying.
companies will raise prices when and as they can, and you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will
Got a
often
high
just
volume
go
note on
across the street
SPY
in a
around the
group, if
633
you know what I mean.
range. It could be an
That'll happen.
interesting,
We don't see
interesting
a lot
play.
of that. I mean, what we see now
Stops
is
are getting
basically the
ticked
very
out right here,
beginnings
probably
of
trying to play
whatever
the
the effects
inside
turn out to
day.
be on
Maybe
goods
we end
inflation.
up there.
And
Looks
you know,
like we
I'll
are.
say again, they may be less than people estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to
This is
somebody who's
looking
looking for a house, who's
interesting.
facing a 7% mortgage and maybe can't afford those rates? How do you justify that? And
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an
Pull up
overnight
the
rate.
daily
and
real quick.
the rates that go into mortgages are longer term
Look how extended
rates, like
we
treasury
are.
rates. It might be
Just
30-year
going
rates,
to
it might be
this
shorter
low
than that,
volume
but it's not the overnight Fed's rate.
Gap right
Something we
here.
don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's a kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. And we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed
Look at
need
this,
to
you
see
guys.
before,
SPY is
you'll be ready
not
to cut?
having
Do
a
you need
good
inflation
time.
back nearly to target? Are there other things in the pricing
It's
that
going
you
to
look
break
for?
this high
Do
volume
you need to
node
see
down
weakening
here.
in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance,
Wow.
you would think you'd move
This
in
is
a way
getting
closer to neutral,
tempting.
and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting, will it be dispositive?
Anybody
of
in
that?
trades right now?
It's
This is
really hard to say. We
crazy,
don't make those
crazy
decisions
movement.
right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect.
If you guys
is gonna be
haven't,
a temporary
please go
one-time
ahead and
thing.
like
Is
this
that kind of
video or
thing
live
affect
and
your thinking, or do you
subscribe
just need
to the
see
channel.
number come
If
down,
you're sticking
I think,
around.
closer to 2?
We'll look at everything. It's as I mentioned, a pretty
Would really
reasonable base
appreciate
case is
Wow,
that
look at
this will
SPY,
be a
guys.
one-time price
Who-
increase, and in the
Wow.
end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank
So
you.
this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now
Gamble
is
anybody?
up to 35%. I mean,
SPXL.
is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
We're monitoring the situation. We do, of course,
Monitoring the
situation.
situation.
Looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that. But if we have to make do with what we have, but I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News.
You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income
A lot of
households.
questions today,
How
huh?
do you see that evolving in the next few months? And how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that.
Let's see what happens here. We're in power hour,
generally,
5 minutes
and
into
if you
power
look at the
hour.
banks and
SPY is
when the banks
still
talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true. And it was, again, right in line with what we expected, the GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to. And there's no question that it's slowed. And, we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you said that the main number to look at is
credit
the
card
unemployment
companies will
number
say that
overall,
the consumer is
but
in
what was
solid
the discussion
shape.
about the state of the private
People
jobs
throw
market?
anything on a credit card.
So
buy now,
I'm not
pay
going to talk
later.
about any
That is
individual's,
not a good
any
measure,
individual's comments.
in
I
my
wouldn't do
opinion.
that. But I think what we know is that private sector job creation, certainly in the last report, we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, which it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for
Getting
workers
a
is
nice
slowing, but so is the supply.
kinda
So that's
okay rebound
it's in
here.
balance, oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the
Bitcoin
flow
is
into our labor
dying
forces
right
is just
now.
a great deal
Not
slower, and those two things
surprising.
have slowed.
But yeah, it's
more
down
or less
to
in
like
tandem.
just
If you
dropped
look at
under
things like I mentioned,
116,000.
Look at wages.
Pretty
Wages
similar
are
movement to the
gradually cooling.
market.
Look
SPY
at
and Qs, that is.
vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
That's what's
Sure.
the case
So,
against cutting
We
rates.
have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around. All the way around the table, everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express. I won't tell you the reasons they'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of
take a look at XRP. Why not?
Different views of how tight policy is. So we have those.
Sheesh.
I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that
XRP.
all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it.
Like 5% on XRP, it's solid.
Because,
take a look at
inflation is above target.
Solana.
When we have risks to both goals,
crypto is not loving
It's
it.
farther away from goal than the other, and that's inflation.
King
Maximum limits
Bitcoin.
at goal. So you have to. That means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat
Bitcoin
lower than where we are now.
chilling.
No one knows exactly where that is.
1.7%.
So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data.
SPY
In the
coming
next cycle
up.
is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Get a power hour rip.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com.
Testing this high volume node. Let's see what happens
final
there.
sales to private domestic purchasers. That was down to a
kind of mid volume on
1.2%
this
gain
buying
in
compared to the
second quarter
selling.
from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondering if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter.
Hey, the SPY recovering.
Half to half, and often gets revised, after the fact. The labor market data, we still think is,
and what Powell
continue to think is the best.
maybe recover half these losses.
A 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those it took to go in. And actually, at some point, if they're equally risk, then you really want to be at a neutral policy stance.
Moving up a bit.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No, I just think we're going to need to see the data, and it can go in many different directions. The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned. Thank you.
Oh yeah, look at SPY go.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Powell said, I ain't got no update. I'm out of here. And that's the event, everybody. What did y'all think? I called it. You said he's going to look at the data and we'll see what happens next time. It's been the same thing every time. But yeah, guys, that was cool. I mean, we got some movement here on the SPY. Definitely got some movement, some bearish movement, but we are recovering. Dropped nearly 1% from the top, and then from the bottom, we're up about 0.28%, a little like 0.3%. So yeah, not bad. Got some movement if anybody was trading, but coming up here pretty soon, in 1 hour exactly from now, I'm going to be going live once again with Tom Sosnoff, CEO of Tasty Live, co-founder of Thinkorswim and Tasty Trade, to talk about the Robinhood earnings and probably Microsoft and Meta earnings as well. We can take a look at those real quick before we head out. Take a quick 1 hour intermission before that, but Robinhood's still looking pretty good going into its report. Open up the 5-minute, had a little bit of a dip just like everything else, but yeah, solid day for Robinhood going into earnings. Microsoft, let's take a look. Not as good, a little bit down on the day. Not too bad though. I believe that's basically all-time highs. Insane rally from the bottom on that one. 1 second here. Gotta place this order. Okay. What else we got? And Meta. Meta also down on the day, still near all-time highs. A little bit worse. What is going on here? There we go. But yeah, probably going to call it here, guys. The event is over for FOMC. But again, we're going to be live very, very soon again for earnings. Like I was saying, Microsoft, Meta, and Hood. And let's take a look at how many Fed rate cuts in 2025. People are still expecting mostly two. So we'll see what happens there. But yeah, go take a little break, you guys. Maybe eat some food or something, and I'll see you guys back here in exactly 58 minutes from now. Going to be live with Tom Sosnoff, so you definitely don't want to miss that one. All right, if you're still there, hit like, hit subscribe, and hit that notification bell because you'll get an alert for when I go live again in an hour. Congrats on your XRP trade. I'll drop the link for the discount one more time. Definitely just keep this on hand, you guys, because it is a very good deal on TrendSpider. You can get up to 53% off. Use dropped in on X. You can just look at the screen and it says get 53% off TrendSpider using that link. It's trendspider.cc/YT live promo. Take advantage of it. You're not going to get a better deal than that, to be honest. So if you were planning on getting TrendSpider, probably a good time to go ahead and take advantage. But I'm going to call it there, guys. I'll see you guys back in about an hour. Peace.